Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened during the previous week and how we can plan for a better trade for the next day. Right? And this is analysis for the week that is starting from tomorrow, September 5th, Monday 2022. Let's get into the charts and see what happened. So here you see the weekly candles. Right? It's a good bounce up move, but it did not manage to close above the previous candle's high. Previous candle, you know that it's a shooting star and a bearish formation, and then market dipped, and the overall correction was 4.5, and then it bounced up. So the bounce up did not close above the previous candle's high, but very good bounce up is what you see. You can see green candle, that is after making a low last week. So last week was very dramatic in the sense that it fall down and then recovered, zigzag motion. Swing traders would have had big trouble. Banknifty, on the other hand, showing that the recovery was excellent. The bounce up was excellent. It also did a dip, and it bounced from the 38,000 levels and then managed to close above the previous day's close. Right, it's almost engulfing, you can say, not exactly fully, but almost engulfing the previous candle. So that's a very bullish edge as compared to the Nifty that Banknifty has got. Right, that's weekly. Otherwise, nothing much. So another view, we'll come to that. So the daily charts, it's clearly showing consolidation. Inside bar. Last 2 days of inside bar, inside a big bounce up that happened. Fully engulfed in that. Right. So it's consolidation clearly seen. Banknifty, it's indecisiveness because it's not an inside bar completely. It attempted to the Thursday itself to climb up over the previous bullish candles up move and then got sold off, and then another attempt was not successful. But so indecisiveness is what is more projecting in the Banknifty. Consolidation is what is more projecting in the Nifty. That's the daily and the weekly charts. Bollinger Bands clearly showing there is a consolidation in the volatility contraction. Sideways movement is what this Bollinger Bands are indicating. Flat upper band and lower band. But look at Banknifty. The contraction has happened, but it is having an upward bias. That means Banknifty is getting ready to move up, is what the bands as of now, the daily charts are indicating. So that's the difference. Contraction is there in both. That has been there since a few weeks now. But an upward bias of towards bullishness is there in Banknifty. Look at this, another view from the investing outcome. See, this is the famous trend line that we had been talking about. Right? So still this week also, in spite of all the drama of dipping down and then climbing back, big mega up 450 moves, but still it did not manage to close above the trend line. Banknifty, yes, this is an expanding wedge, you can say. Right? So the wedge expands, and 3/4 of that is supposed to break out. Right? Nifty also, if you look at this way, ignoring these two swing highs and then join this, you are seeing that volatility is very high. Right? It can swing too much more than Nifty, but it is also just on the edge. Right? So it's on the edge of a breakout zone, you can say. It's very difficult to predict what market is going to react, but bias from the bullishness is there, seen from the candles and the price action. It's all more of green and more of bounce ups that's happening. Right? Support resistance levels. Basically, I'll just quickly say how this is derived. So previous swing highs and gaps are considered for the support and resistance level for the next week. This is a Nifty. So immediate force resistance would be on the upsides at 17,778. That's a previous swing high. So that mega bullish moves up. After that, you have the 17,992, which is 18,000 rounding number close by, and also a previous swing high. So that's resistance. So these two has to be cleared before we can do anything. Downside, the first support would be the 17,500 zone, which is where the market took the support and bounced up. That's what happens. Then after that, you have a gap support that is coming at 338, 350, that zone, right? The gap support is there. Right? There is a previous swing low also. This zone is very important. And then previous swing low of 17,150 levels. Right? That's important. And then you have the gap support again coming at 17,000. At 17,000 on the downside and 18,000 on the upside is what we have to watch for. So as long as the market swings within this, it's just consolidation is what we have to consider from a swing point of view. Bank Nifty, the immediate support would be 39,750. Here the previous swing high. Then we have 40,200 levels, then all-time highs. Okay. Downside similarly would be 38,800, that zone, and then 38,400 zones, and then 37,950, 38,000 zones, and then you have the 37,250 and 37,000 nearby zones. So gap support is what dotted lines are indicating, that is near to 36,800. That's a major support zone, and then 38,400 is also a gap support. That's what you see, right? So as long as it's swinging between this 37,000 and 40,000, it should be okay. But beyond 40,000, it's breakout, and below 37,000, probably we may making another swing low. Never know. Looking at the momentum and the trend, this is the daily and the weekly on the left side that you see on the Nifty, daily and the weekly charts that you see on the Bank Nifty on the right side. So momentum is slipped to the sideways on the Nifty, but maintains the momentum on the bullish zones on the Bank Nifty, but flat. Bank Nifty is maintaining the momentum on weekly as well as right, weekly as well as the daily. So momentum is just maintained with flat strength. Right. Nifty is sideways. Right. So sideways momentum, flat, bullish momentum, flat is what we have. Now, AD extend indicator is showing that it is maintaining the bullishness, but with falling strength on the short term and flat strength on the medium term. That's what it is there for Nifty and Bank Nifty both. That is as per the ADX. You can see that it's maintaining the bullishness of the trend, but very weak strength, right? Flattish or down falling is what we are seeing, right? That's about the momentum. Moving on, volatility and open interest. Volatility, if you look at the India VIX, you can see that it spiked up 8% last week, right? It's not 19.25, it's 19.55, very close to 20. So India VIX is a sentimental indicator. It shows how much of uncertainty does the market account for, and it's very close to 20, and there's a chance that it can spike up because a lot of uncertainty still remain. So that's something you have to be cautious, and it has been spiking down and spiking up. Last week it was very volatile, and that could continue because it's very close to 20. Obviously, you have to be cautious about it. Open interest was the next weekly expire of September 8th. Shows contradicting again. Nifty had a short build-up and Bank Nifty had a long build-up. So Bank Nifty has got more bullishness element in it. From the PCR also 0.91 and 0.80 in Nifty. 0.80 is Nifty. So 0.91 is very close to 1, which is saying that the put call ratio is more biased towards bullishness on the Bank Nifty. So that's open interest. Naturally, you can say that it's highly volatile, very close to the 20 mark, where the volatility could create chaos, and Bank Nifty has an edge from the open interest analysis, what you can understand. But look at the levels. Bank Nifty showing that 17,000, 18,000, just like how the charts are showing. So that's what the option writers and put writers and call writers are saying. Support is in at 70,000 and 18,000 is for the resistance is seen. The second level support is in at 16,500 and then 18,500 on the upside, where the supports and resistance are seen. So on the Nifty, Bank Nifty is seeing 38,000 and 39,500. That's also a wide range 1,500. So put writers and call writers are seeing that there has been speculation is with a wide range because of the volatility factor. 37,000 and 40,000 where the second highest put and call writing is seen. So 0.9 and 0.8 we have seen the Nifty and Bank Nifty The put call ratios close to bullishness, but not yet there. Short build up and long build up on Nifty and the Banknifty is contradicting. We have seen that already. That's why. Moving on to the sectorial watch, IT sector. A lot of sectors were down last week after the drama that happened, where we had big swing low and then full recovery from that. Right. That's a 3% down on the IT metal. So, by the way, that big fall happened on Tuesday because of the US markets falling down following the Jackson Hole meeting, hawkish commentary by the Fed chairman. So that caused the IT sector to fall down, metal sector also to fall down, pharma also fall down, right? So metal is flat but down, IT is severely flat, 3% down, pharma is 0.5% down. Others are all doing good. Auto sector 2% up, FMCG 2% up, realty 3% up. So those are the sectors which pulled the market up. Now, bullishness is most seen in which sector? It's in auto sector and FMCG sector. That's because it's bullish momentum in weekly as well as daily on both of them, both the sectors. So pick your long trades on that. You don't need to be it's a mistake that is put in there. Pick your long trades in auto sector and FMCG stock because they're having bullish momentum on both time frames. Right? So it's likely to move up. The sectors are still struggling the sideways. Stay away from IT because it's still in the bearish stance unless you are an investor or something, right? If you're a trader, stay away from it from momentum trading perspective. Sectoral analysis is what you're talking about. Yeah, red candle, 3% down. Metal, green, bullish momentum. Auto, very bullish candle, momentum high. Pharma down. Inside the trend line, momentum flat. FMCG up, bullish green candle. Realty up, bullish green candle, momentum up. Right, almost momentum is actually on the edge of getting into the medium term bullishness also. Right, so stock could be picked up from the realty sector as well along with FMCG and auto. Look at the FMCG heavyweights. Good up move and bullish recovery in the HDFC Bank. HDFC also showing a bullish wide range bullish candle, but both of them are still in the sideways momentum. Alliance has gone down last week. It's flat and falling from the momentum perspective. So Alliance is giving trouble. It is well within a trendline channel. Keep a note of this trendline channel breakout and then you could trade accordingly. Upside and downside. But momentum is flat sideways. So none of these heavyweights from the momentum point of view is giving an opportunity for a breakout or breakdown. Another one is IT. You don't have to say that both the IT had gone down. It's a indices the TCS and it's a inverted hammer on the INFI. A lot of resistance on the upside. It failed to break out after a rounding pattern formed on the weekly. Momentum is in the bearish stance on the short term, and you have to be cautious, right? It's in the support zone, so it may consolidate now ahead. Both these IT stocks. HDFC Bank the most bullish, still maintaining the bullish momentum. Candle is on the neckline still. It is just not really completely broken out, but it's most bullish among the heavyweights. You can say Kodak Bank is showing green candle, another one, but we know that it just moves up and down within this range since several months or probably years. Right? So, but good up move on the edge of getting into the bullish zones from the momentum perspective is what Kodak Bank is showing on the charts. Moving on, institutional participation Fyers and DIS. Fyers net sellers of 1,300 crores while DIS sold just 230 crores last week. So Fyers continuing to show confidence in the market is a good thing. The derivative point of view, FIDI moment has been down. Going on the global markets in the US markets, there's red trouble there. That is where the greatest trouble for us now. Right, because US market is down and globally across the world, it will affect and it would affect us also. Even though we ignored and reacted, both we did last week for the US market downfall, but this week again it has fallen down, 3% down almost all the indexes. Dow Jones is going to be 500, Nasdaq, all of them. It's at a support zone if you look at the charts here. Right, it's a trend line channel downfall, and there is still more space to go. To 29, 600, 500, that kind of levels, right? That could be possible. Keep a close watch of that in the pre-market every day. So the charts from the weekly or the medium term is showing that it's going to be getting into a bear zone, right? It's a falling trend line channel and price is deep diving down. Same with the case of Nasdaq, also it slipped from the previous support zone where it had climbed earlier after a small recovery. Same with S&P 500 also. There's three red big wide range bearish candles. What do you see? And momentum is towards the support on the medium term. So you have to see whether it takes a support here at this momentum support zone in both all the US indices and then bounce up from there or not, or would it break down and get back in medium term bearishness also? Although short term already it's bearish, but you have to keep a close watch if the weekly charts are also getting into bearish on. So if that's happening, we have trouble ahead. Crude oil is cooled off. That's a good thing. The global recession fears and the demands. Global recession fears and demand is causing the fall, is what you would assume. After the COVID, we had a demand rise and the price went high. 13-year high. There's a trend line channel. It's in the bottom. And it's at a support zone. Momentum is also in a support zone in the medium term. So it may be consolidating here for a long time. But anyway, as long as it is below the 90 levels, it's good for our economy and our markets, obviously. Gold has taken a support once again at the same place where it had retreated multiple times to bounce up from. So it may not further fall down from here, is what you would assume. But overall, it's a bearish price action that you see in the medium term and the short term on the gold, right? Another red bearish week went by in the gold. So topics ITC. ITC is a FMC giant with multiple other businesses also now. Momentum is bullish, and nobody expected ITC to move from the 200 kind of levels where it was consolidating for a long period without doing anything. Now it's trendingly moving up, and now the cup and handle breakout zone has arrived, and any up move from here would be an opportunity for a good swing trade set ITC because the momentum and the trend is bullish. Momentum and the trend is bullish on the weekly as well as the daily on India's Cements, the largest Chennai-based IPL sponsor cement manufacturer also. So it's a cup and handle pattern, and the breakout from the parallel channel is what you're seeing. And it's also climbed above the neckline of the rounding pattern, and then there's every chance that it can further move given the momentum and the trend. So India Cements and ITC both long outs. As usual, we have the Nifty option strategy, the safe trade that we completely hedged by selling call option and the put option of the near month and the far month buying of the call and the put on both sides to hedge it. So 80% of reasonable range and good risk reward for a 2 to 3%, can easily be made from this. Right? This is double diagonal calendar splits that we had been working on every week, and it can give very good risk reward as long as you don't hold that to the end, and it can gain from the momentum from the volatility spikes also that can happen, right? So 17,500 nearby zone is where we are. We are a very wide range, that is we are getting from nearly 70,000 to 18,000 kind of completely what the charts and the OI is indicating. That kind of range we are getting completely safe trade as long as market does not make any mega big downfalls or big breakouts. Right? Yes, market has corrected nearly 4.5% after 18.5% of rally and 23% on Banknifty. So after that, it's now consolidating. That's what the charts are saying. Banknifty is showing some upside bias. We had seen that, but the volatility has contracted there also. The thing is, Banknifty, both of them have a weekly trendline channel closure inside it. So if it breaks out from there, then we get a confirmation that rally is going to continue. Otherwise, we would have to assume that it's consolidation. And as long as this 17,000 is broken, we don't have to worry. It's maybe still consolidation. If it breaks down that, we have to buy. Similar in the upside, 40,000, and there's a mistake here. I mentioned close up of 18,000 and 40,000. Okay, correct. That's correct. 37,000 and 17,000. Yeah, that's what I look out from the downside. So market view is mild bullishness. Why is still bullishness? Because Banknifty charts are showing bullishness. It's almost an engulfing wide range bullish candle that happened last week, and the upside expansion is seen in the bands. Right? Fyers is still buying. Right? Momentum is still not given up. It's still in the bullish zone. The trend also in Banknifty. On the side slippage into the bearish zones to the sideways zone has happened in the Nifty, but it's okay. PCI is not that bad, very close to bullishness. So higher buildup is showing range, but not a range below the standard deviation of the bands, right? So mild bullishness is what I look for the next week. The only worry problem is the US market, which is showing heavy bearishness, right? So consecutive 3 red bars and slipped down and going down. So worry global cues, so worrisome inflation, worries Fed interest, Ukraine war, China war, all these things are still there. So uncertainties, a lot of uncertainties there, indicated by the India weeks. Cool off little bit, so it's relief. The dollar is spiking up to all-time highs last week also, and rupee is the weakest level again on not 9.9 something, right? That's not good, right? Crude is only relief that we have. US markets against, US dollar also again. Positive factor is that we've seen the kind of buying that happened in US in Tuesday, right? That's the strength of the market. The Fyers, who has been continuously selling, is back with the buying mode. So that shows that there is potential in the market. So all we have to do is look at the levels. 18,000 above, go bullish. 40,000 above, Banknifty go bullish. 70,000 below, go bearish. 37,000 down, go bearish. That's all we have to do. Until then, market may be fluctuating here and there. That's would be what positional and short term and medium term traders actually. Intraday and swing traders will have to look at those interim levels, that previous swing highs and gap supports and gap resistances, and then trade accordingly. Always hedge your positions so that you don't have any overnight risk if you take such positions. And if you are facing trouble with your quality stocks, hedge them. If you want to invest, use cash equivalent puts and covered call strategies and options. All these videos are there in the playlist if you look at that. Right. So that's my view, mild bullishness for the next week. So basically, I expect the market to consolidate more on the Nifty. Banknifty is not allowing me to give a sideways view, so I am mild bullish. Hope this helps you to frame your trade plan and market view for the next week. If that helps you in some way, definitely consider hitting the like button, putting your comments, feedback, share it to others, and subscribe if you're not subscribed. We have very few subscriptions, and appreciate your help in this regard. Thanks for watching. Happy trading, happy learning. Bye.